Here at the desk to discuss professional capital management founder and CEO Anthony Pompliano. Great to have you here. So let's take a look at the backdrop of what's happening before this big meeting with Xi Jinping. We have a number of new trade deals and frameworks that came out of this trip to Asia, including Malaysia, Cambodia, Thailand, Vietnam, Japan, South Korea, all of those leading up to the president saying to China, hey, let's make a deal. Also just announced by the president, $350 billion in U.S. investments in return for a 15% reduced auto tariff in South Korea. So what is your take ahead of this big meeting that we're going to watch?
I think we're watching as deal makers make deals, and you're seeing that there was immense pressure. There was a lot of posturing. There was a whole soap opera of the trade tariffs and the trade, pressures. But now you have the deal makers coming to the table, and they're going to get the deal done. And I think one of the interesting things about China and the U.S. is we would love to decouple. Everyone would love to not be dependent on each other. But these two countries are the largest economies in the world. They need to work together, and you now have everything set out for them to get the deal done. I think they'll get it done.
What do you think is going to be more pressing, TikTok or soybean purchases?
Well, look, I think China making the soybean purchase is kind of like an olive branch is a good sign. But really, at the end of the day, what type of economy do we want? Do we want a technology economy, or do we want one where the physical analog world is important? And, the truth is both are really important. And so I think what you're going to start to see is a little bit of horse trading. You're going to see them say, hey, you know what, maybe we'll be a little bit looser when it comes to soybean stuff, but we're going to take a little bit more when it comes to TikTok. And my guess is that TikTok is actually a bigger threat than the soybeans. But, again, the farmers in America, they're very loud. Scott Bessent, soybean farmer himself, and he obviously is saying, hey, look, let's get this done as well.
Look, I agree. This is both. They both have to be on the table because the economy's integral, not separated. Percentages vary. But there's also something here that I don't see getting a lot of attention. Building up to the meeting with Xi Jinping, this seems like a strategic deployment of economic power, the leverage, right, of economic leverage, trade deals and more. Because in order to offset China, you need to have leverage, and Trump's a leverage guy.
Well, I do think that both countries have been very strategically trying to lessen their dependence on each other, right? I think something like 14% of exports from China now come to the United States. It used to be a lot higher. So China obviously doesn't want to be dependent on us. We don't want to be dependent on them. But at the same time, there's certain things that we probably don't want to make here in America. And, one of the things that I think is the public narrative that is completely wrong is that America is not good at making things. We are the leaders when it comes to reusable rockets, at defense technologies, at plenty of things when it comes to, biotech and many other aspects of the economy. And so if you say, hey, do we want to make T-shirts and sneakers, or do we want to make reusable rockets and defense equipment? I think we'd rather be in the high-tech area. And so I do think that the United States is able to continue to lead on this global stage, but we're going to still need China for many things. And so I think that's why you're seeing them come together. And both countries, they don't want the pain. They want to get a deal done. Hopefully they'll get it done today.
All right, so to avoid some of the pain here at home, Fed rate cuts. FOMC meeting, the board votes 10-2. But then you look at some of the factors that are out there. Atlanta Fed, for example, has GDP at 3.9%. They were 3.0, 3.8 the prior month, so above 3. We get this vote. Myron made the case for a 50 basis point cut. Next steps, mortgage rates are going to come up in December. Other things come up. I would have liked to have seen 50. What would you have liked to have seen come out of it?
I mean, this is insane. The Federal Reserve is so far behind the curve. They have been behind the curve since 2020. They missed all of the inflation. They told us it was transitory. They were wrong. They then told us they were going to be data dependent, and they started trying to forecast inflation that never came. They were wrong. And so now what they're doing is they're basically getting put into a corner, and they have to do this. They don't want to do it, but they have to do it. And it's because the labor market is getting smacked in the face by technology forces. And so artificial intelligence and automation are coming. We're seeing companies lay off hundreds of thousands of employees, but yet still continue to produce record profits and record growth. That is productivity. That is efficiency. And so these companies are becoming more valuable because now they don't need the human labor. So what do? You got to lower rates. You got to get cheap capital into the market. And so I think that it's very interesting that there's so much talk of a bubble in financial markets, but what you're actually seeing is these companies are growing faster than we've ever seen before. These are the greatest companies ever constructed in human history.
Important note to avoid the panic out there. A lot of earnings reports from tech sector today. That's moving the markets at the end of the day a lot more than just the Fed rate cuts.
Yeah, and look, I think that what people are starting to realize is this AI thing is being adopted by these companies. And I thought it was Jerome Powell made a comment that, during the tech bubble in 2000, there was a lot of ideas, not a lot of companies. Well, now we got a lot of companies, and they got a lot of money, and a lot of the investment they're making is with their cash flow. And so I think that people should just calm down. The market's going to continue to go up. and the Fed rate cut today allows for the bull market to continue for quite a while.
And AI needs energy that they can't yet access, so that's also going to slow them down. Anthony, great to see you. Thanks
Absolutely.
so much.
Thanks for having me.
Great to see you, Anthony.